I love it. Well, welcome, Real Fridays. It's August 9th, 2024. We're super excited. I know that I'm on the road. I'm pulling a Jeremy Potter right now. I'm on the road right now, heading back to Western Massachusetts for some meetings here in New England. And but so I apologize for being a minute late. In this entire time, Jeremy's grown a mustache, so I apologize for making you wait this long. Is that something? Is that I've never? What are you trying to do? Are you actually trying to grow a mustache, or what are you trying to do?
Well, what I was not capable of doing this week was getting up on time in the morning. So a lot of this is just, we're just going to look a little mysterious for the week until I get up early enough to actually be prepared. But I've started scheduling like 8:30 meetings thinking that'll get me out of bed. That'll get me to start the day. But what ends up happening is this. So this is
like 5:30 in Jeremy time.
Right? That's what I'm saying. I am a proud night owl, and I'm trying to do my best to change that. I signed up for a half marathon. I'm getting up at 8:30 before 8:30.
Dude, you do look good. Your hair looks perfect. It's like the opposite. It's like the opposite of Brock. It's like Brock's hair is always disheveled.
I love coming on this.
This is that no frills look where I don't have to use as much product as Potter.
Wait. We know you don't ever use product. There has never been product in your hair, so I think but you look young and you're very pretty. So, I mean, you went to Bodwin.
Yeah, that means a lot going for you, Rick.
You went to Bodwin, so that's where the boys in Maine go.
Yeah.
But no, it's been a crazy week, man. Obviously, it was a good, unique one-off episode with Mark Calabria last Friday. Definitely appreciate the flexibility that you had, Brock, and I know Jeremy bailed on it, but it was really
still in Vegas at Inman, so it was easy for me to let you guys run the show. Yeah,
it was a really good interview. If you haven't watched it, you guys should really watch it. Mark is going to have a tremendous amount of influence on the future of housing, especially if Trump gets reelected. He talked about positions in Treasury or other positions he potentially could roll. He did say he was not interested in going back to the FHFA. But it's a really fascinating insight as to how Washington works. His opinion was that, look, oftentimes we make policy decisions on not like what's the best decision. It's like, which one is the least worst, and let's just go with that one. Both are bad. All of them are bad, but let's just go on the one that just seems to be the less worst option. And let's move forward with that. And of course, everyone's upset because you're dealing with choices that are never good, or that are just the least bad one you could go in. So it was a really fascinating insight as to how politics and how the regulatory machine kind of works and how it frames and fashions questions around privatization of the GSEs fully. Or what to do in that regard. So I really hope you guys have an opportunity to see that. And the next time I'm in DC, I'm going to have a beer with him, and then we're going to have to, the four of us will have to get together with him, because with your legal component, Jeremy, and I think, both of you on the tech innovation side, I think it'd be really interesting to kind of get his take on the future of how tech is reinventing the regulatory oversight of mortgage and how that sort of interplays. Because at some point in time, the regulatory component broke apart and built barriers and walls in between each functional component of mortgage manufacturing. And tech is, the whole point of it to some degree is efficiency and breaking those barriers down for communication, transparency, flow, and efficiency. And so there's been this tug of war between tech and the regulatory environment. So, I mean, I'd love to get a better sense of that from him as to how he sees that tug of war, in the future. But I don't know. Were you able to even watch it or see it or see any of the highlights on it?
Yeah, I think one of the things that you're referencing that, Mark has always been really keen on is, where does the risk live and who takes it? One of the things you just mentioned is very interesting for the future of Fannie and Freddie, because I've still not really gotten a straight answer on whether Fannie and Freddie moving out of conservatorship is good for IMBs. The going theory seems to be, well, the free market competition that comes with being out of conservatorship is always going to be better for everybody, the market holistically. But I think IMBs are the big loser if Fannie and Freddie are truly privatized in the way that Mark mentioned. Now, he mentioned not going back to FHFA, so he's going to be further from GSE reform, literally, but maybe closer to the mechanisms of it if he's at, Treasury or somewhere else. But to me, it really speaks to, first of all, where the structure is. Second of all, where the risk lives. And third, you're talking about like, how do we then either lower the risk or at a minimum better identify it while we're doing this, while we're seeing what the future is going to be like for selling and delivering loans and to whom in the market. So those were the three ways I thought of it. I know those are at three different levels of analysis, like big picture, sort of, medium, and then what we do every day. But that was what sparked in my mind. Hearing from Mark is going to be like, oh, it's going to be really interesting how IMBs feel if they have to, quote unquote, compete in the wild with a Fannie and Freddie.
I would have thought that was like a pretty universally negative read from IMBs. So that's interesting. I mean, it's probably a pretty libertarian crowd, IMB leadership, or conservative, but free market principles. But it seems like Fannie and Freddie have been pretty good to the IMB growth of the last several years in my limited purview.
Yeah.
Yeah. No, look, I'd love to just pull him into the, in part, it'd be great to have a follow-up after the election to see what the election consequences are. Should, let's say, Trump lose, then it'd be great to have him back and say, like, what in your mind, where do you see housing, affected by this? And then to integrate these discussion points, that you're raising, Jeremy, and of course Brock. But no, it's been amazing. I've been crisscrossing the country. I've visited a number of companies, just getting a sense of their strategy and understanding where kind of the retail ecosystem is really sort of headed and how people are framing growth over the next 2 to 3 years. So it's been a really fascinating sort of week.
When we had Kelleher on, Mike was saying you're a referral company or you're an experience company.
Yeah.
And I have had that framework come up in my mind a bunch since that day, talking to lenders specifically. As you're crisscrossing the country, talking to these folks, are you seeing anyone trying to move from one category to the other? Or are referral-based lenders referral-based? And that's that.
There's a few companies, like we've talked about before, Better. I think there's a few companies, I think, that get the idea of really building out an experience-based platform to kind of shift the narrative where it's like, it's almost regardless where the lead comes from. I mean, certainly every lender would love to cultivate their own leads just from a cost of acquisition standpoint, to retain the relationship with the consumer and to bypass middlemen. But I don't see anyone really innovative enough outside of the Rockets. But I think Better is phenomenal at this. I mean, I think they're the one, and they're a top 50 or maybe 60 IMB. But they're just, I don't see anybody critically looking at this to where outside of just the business as usual. This is where we get the business, where we've always gotten the business. Let's just manage how we get the business. They're not trying to make that channel better. They're just trying to they're just reacting to the business that they receive, and they're trying to tease it. But I don't see anybody really thinking about this strategically. I mean, I hate to say that, and I'm trying to think of the conversations that I've had. I think NFM has done a good job. I think in the way that I think Greg, because he's got that influencer division of trying to do that consumer direct placement, on social to be able to sort of engage directly with consumer desires and needs. But I don't hear a lot of conversations around how to make, retail better or the relationship with realtors better. I think that there are clothesline clamps solutions like with NewsZip, or being able to like take the clothesline and take the cloth and just clamp it. We'll take the realtor and the consumer and the mortgage company and we'll clamp it. But that's like an outsider's innovation of trying to convince mortgage companies how to do it better. Those aren't organic solutions. Those are like you get people like Brocker pulling their hair out saying, hey, this could be so much better and so much easier, and you're not doing it. You're not taking advantage of it, and you should. But there's nobody organically birthing these solutions from within the mortgage business, outside of your Rockets. And I just don't see it. APM's not doing it. I don't think Prime Lending's doing it.
One of the things
I don't think Cross Country's doing it. I mean, they're just.
Sorry, I didn't mean to cut you off, Brock. Go ahead. What were you gonna say?
No, it is interesting, and I do. My conversations I have are just so different than the one Rick has. So I just wanted to hear out his point. But we get approached by people very often. I was at an investor and board meeting this week, kind of reviewing all the different types of partnerships we're doing, where we're focusing, things like that. Because we've happened into a few different channels that we never planned on, right? We thought the direct-to-consumer lead buyers are the ones that need a referral network, the Rocket Homes or Mellow Home or better real estate, in a box for everyone else that isn't going to spend millions of dollars building a real estate division. But we have found, signed one this morning, we have found a lot of kind of more classic retail or even like broker style retail, loan officers or branches or even full companies that want to move to this hybrid world where they're like, the one I spoke to today, right? They have a ton of branches in Illinois and one or two other Midwestern states, and they want to start buying leads in Arizona, Texas, and 2 or 3 other, Florida, I think, Georgia, and they're licensed in those states. They have no referral partners and no business, and so they're gonna buy Lending Tree leads or Lower My Bills leads or whatever. They're gonna test out a bunch of different lead sources. They're gonna use us as a referral network. And it's like, that is sort of an unnatural solution, right? Like, it's very different than the rest of their business. We can give them the guardrails where they'll have good partners. We can introduce them to good lead sources. Like, we can clamp that. I kind of like that analogy. But yeah, it's sort of like, it just becomes 2 divisions at one company almost. It's not like, it's not a super organic flow from what they're already doing. It's not. So it's like, it almost is like we're just happening upon the really ambitious or really innovative folks that are like, trying to grow another state or trying to grow another channel or trying to grow another lead source. But it's not I think I entirely agree with Rick, basically, that it's like not a natural continuation of what those guys are doing. It takes an innovative person that read about NewsZip and is like, oh, I could use that. It takes those sorts of conversations. Or seeing someone else do it, or having worked at one of those companies in the past that's like a mega national consumer direct company. Obviously, we have a ton of ex-Rocket in our network, and ex-Loan Depot in our network. So it's an ex-Better in New York, obviously. But yeah, so I totally agree with Rick, actually.
Yeah, I think that one of the things I think about in terms of like, I'm going to do business the way I've always done it, type of mentality that Rick was talking about is, where does it come from and where do I want it to come from? Whether those are leads or data or business or brand, it's like, when you and I are talking to people about NewsZip, one of the things I always ask is, do you want to have this control? Like, do you want to build what it takes? Do you want to think this way? Do you want to culturally have this? And when I say control,
in market, like really,
exactly. In that case, it's like the control of the marketing and the lead from this perspective. And that helps kind of curate who does and who doesn't. You made me think of something I saw this week. I posted it in the LinkedIn comments. because I hadn't thought of it a minute ago, but it was the best piece of content I saw this week, which was Joe, the CEO, co-founder of Total Expert, Joe Welu, talking to Justin Messer at Prosperity Home Mortgage, CEO of Prosperity. Justin talked about mapping what is essentially consumer experience, mapping consumer friction.
Yeah.
And then not being afraid to drive solutions into where there is friction, even if it makes pretty major changes at your organization. And here's an example from the video that I thought was really interesting. Your operational point person for your file introducing themselves via video to the customer, like not a relationship that gets established at very many lenders. And I didn't think that piece was like overwhelmingly innovative. It was, but here's what it was. It was a sign of a much bigger mindset that is exactly the way so the innovation that I heard, the innovation that I saw was that Justin and that organization have to be thinking totally differently, not just in the competition, but than they did a day ago, a week ago, a month ago. And so I saw that as like a microcosm of a much bigger trend. And I thought it was really cool. So I'll share it out in the comments. But to me, that was a really good indication of somebody who was like, hey, I got to do something here and it's going to fundamentally change some of my business. And that's okay. And I was like, all right.
That reminds me of some of like, there's some really big businesses, both tech companies and some old school companies. I think Walmart comes to mind as one actually, but some tech companies as well, where you have to do as part of like the leadership training program or as part of becoming an executive there, you have to have been a frontline worker that establishes direct relationships with the customers. It's almost like because they believe that every person, well, there's different reasons to do it, but I've heard some of the companies' reasoning to do it is that they want every person to be like client facing. They want every person to be customer facing. Not necessarily all day, every day, but like to have done it. And like that's a cool idea for a mortgage company.
The problem is there isn't the talent, time, and attention and priority to invest in people in that way. Mortgage companies just have never been very successful at that, unless you're a rocket where you want to train a daisy chain of loan officers and all they know is VA. So they're not really mortgage bankers trying to figure out a banking solution for a consumer. You just fit in a track, you train them VA, you don't know anything, you don't know any other product outside of VA, and any kind of VA leads, you just funnel them down this person who makes $5,000 a month or $3,000 a month plus however much, $500 a deal. You know what I mean?
Yeah, but now you're bringing up the fundamental question of the future, which is what you asked Brock and I about technology. The fundamental question is, what is the core value of that function? And is the core value of the loan officer to be a highly experienced, dynamic numbers person for product and pricing fit, or is it to be a lead generator regardless of the product pricing that the lead ends up in? And I think that's so fundamentally like, does the loan officer of the future need to know a lot of wonky stuff about product and pricing?
Yeah. Well, what's interesting is it kind of gets to one of the things in the agenda I wanted to talk about was Greg shared a post about basically all these top servicers who are out to eat your lunch, basically, who are out to kick your ass as a mortgage retail lender, right? So it kind of gets to your point of like, there's different ways of growing your presence, right? You can capture the business and then so you have the lead, right? So then it's a matter of creating a consumer experience to make it real easy to say, hey, I'm servicing your loan, click a button to refinance. You're automatically pre-qualified. You could save $80 a month or $120 a month. Just hit I accept, and then you're done, right? And it got me to understand, like, if you look at, these are the top lenders right now. This is the market share from basically June 1st or January 1st to, it says July 5th, but let's just say the end of June.
Right. I need to do a quick timeout here. It's just such a thrill to see Rick using ingenious data after pitching him on this 4 years ago, 3 years ago, 2 years ago, and 1 year ago and being ignored. And then he found it on his own. Yeah.
Sometimes ways of moving forward is you sowed seeds that I actually told actually told what's his name, I thought it would fail. I was just like, don't
John
waste your,
John or
yeah,
Jeff.
I think it was John and Jeff. I just told them that I just thought that they'd raised a little bit of money and they wanted to show it to me, and they pitched. I remember being at Costco shopping, and they were pitching it to me, and I just was like, this is a waste of my time. This is gonna be terrible. Just, MMI already does this, but obviously this is substantially better, and I appreciate the seeds that you sowed, Brock, in it. But I'm a big.
My friends are all investors in the pre-seed rounds because I
love it. I think you guys.
It's only good for me to get the coverage.
You guys, as tech advisors and people that have been real influencers in this regard, it's a good solution to get behind. I love it. But as I look through this, right, most of these United Wholesale, obviously that's one way of getting leads, right? You get others for you, and then you just are a fulfillment center. Rocket is flat out consumer direct. Obviously, they're not a retail company.
Yeah.
Cross Country is probably the first retail platform, right? But you have like bank, builder, bank, bank, servicer, bank, servicer, New Res is a servicer. I mean, they're not really as strong of a retail anymore. Bank, builder, bank.
So what are you saying? What's the point?
Well, what I'm saying is like,
not a builders. Yeah.
Like the pendulum has swung, I think, away from retail. Like the pendulum swung to banks in 2011, 12, 13. And then the pendulum swung back to retail. And then between wholesale, 69% of all loans are retail or independent mortgage banks. But I feel like in that independent mortgage banking ranking, I think what's swelling that market share are massive servicers, right? That are getting into origination business by capturing the business, not because they originated the loan, but because they bought the loan or they assumed the loan. And then it ends up driving their refinance or other opportunity sort of business channels.
Purchase recapture. That's one of the new use cases that we're getting a ton of. Servicers coming to us to help.
It's pretty fascinating when you look at it. I don't know.
I don't think we've done a great job surrounding the serviced client with what I would call pure technology solutions. I think there's probably a bunch of causes why or explanations why, but it's probably one of the biggest areas of new development potentially is how do you put things in and around that experience? And there's going to be a little bit of a race probably to see what the hook is. Like you guys were texting that next week on Real Fridays, I think you said HomeBot is on.
Yeah.
That's a great.
Yeah,
that's
Charlie.
HomeBot. Yeah, that's like a great segue or lead in or foreshadow to that conversation because I think it's two questions. One, what is valuable enough to the consumer to keep them interested, coming back to your platform, to keep you in front of them? It can't just be, it has to be real value. It has to be really interesting and actually meaningful to them. And then two, is it interesting and meaningful enough that you're the go-to, you're the click of the button when transaction begins, when the transaction mindset begins, when the propensity to transact begins. I think there's a ton there, and banks hold incredibly valuable data that is not utilized hardly at all to add value.
But the problem is you're looking at institutions that aren't known for innovation, right? Most banks just simply aren't. It's kind of where innovation comes to die,
Well, sure. But I also don't know that that's the way it has to be. I'm not asking them to homegrown solutions. I'm just saying if data is the new oil, to quote a 11-year-old Economist article, you're sitting on an oil field. Whether you drill it or not, I don't care. Somebody's gonna. So you might as well think about the tools or partners it takes. But there's so much contextual data around the home ownership experience that is valuable to your next transaction, other decisions you're making. We haven't even scratched the surface, in my opinion. That's one of the biggest areas of opportunity.
Yeah. The one thing I will say, I am getting exposure to new channels, obviously, with NewsZip, as we find new channels that are fit. But we've had a lot of success with credit unions, and are starting to have some success with regional banks, which was not on my bingo card with NewsZip, and being a newer solution, and pushing the envelope in a couple of different ways in the consumer experience. But the one thing that I think really helps some of those groups is that they have things like credit unions have groups like the Reseda Group, that's affiliated with the state of Michigan and Michigan State University. They gave an investment and put NewsZip in an accelerator this year that introduced us to a ton of depository credit unions and banks, and they became an investor to some extent in NewsZip. And that's all credit union money being kind of pooled to invest in innovation. So I think it's like one of those. It's like a known gap for these institutions, to the point that
What is happening?
We got 3 or 4. Anyways, I think it's like I think some of those groups. So I'll disagree slightly with Rick. I think that's the status quo, but I think some of those groups are starting to pool resources to identify those gaps, and they're creating consortiums that invest in startups, or groups that invest in innovation, or pooling their resources to create various other structures that like help them with innovation, because they know that they're on their own a little bit slower than your IMBs or whoever else.
Yeah, those are the two. I like hearing that, because I think those are the two areas, or I'll mention two areas within what you just said that have been the most interesting to me for a while. One is customization, and one is real time. Like we should have things running on the portfolio regularly that give homeowners a customized experience in real time for what your situation is and what do you need to do about it if you choose to. And that level of granularity is only going to come from a startup. It's only going to come from a new platform. It's only going to come from a technology partner. When you plug in here, what's that?
Or a couple of them. That's why I set up a partnership with HomeBot, right? Is they have one side of it. They have all the data from the servicer and all the data from the bank. Well, and then we can build the experience downstream of that. So we're really excited about that marriage. We'll talk about it next week.
That is a great point, because now you're offering like a really strategic framework for thinking about it, which is the data has to come from somewhere. A decision has to be made, right? Like trigger something. And then you have to do what?
Has to go somewhere. Yeah.
That could be 3 different partners or not. But to your point, like you have to have data. You got to make a decision off that data, and then you have to execute something. And to your point,
I mean, NewRez's strategy has been like, this is no secret. This has all been publicized in press releases. They signed HomeBot to help with servicing retention marketing. They signed NewsZip to help with purchase recapture downstream. Now it's a 3-party relationship, and that HomeBot and ourselves realized that we should do that with other people. And so we got kind of lucky there, and that happens sometimes in business development, that we like identified a partner via an existing shared client. But I really like the way it broke down. Of HomeBot gathers all this data, all this insights, and there's a lot of other great companies that do it. Some that we work with. Like Realty.com acquired Home Scout, now known as Lender Pro. They're really good at it. Milestones is now known as Homeowner AI, is good at it. Like, so it's not just HomeBot. But these type of companies are mining a tremendous amount of data, whether it's from servicers, banks, whatever. And I do think there's a little bit of a question on what to do with it that we hope NewsZip is one of the answers to, but obviously lenders have to have lending side answers as well.
Yeah, it really does point to the value of the data way more than anything else. An interesting stat, which is sort of analogous to the conversation, is when Optimal Blue was originally sold by Larry Huff, he sold it for $55 million, right? to a group in San Francisco. That group sold it for 2.2 billion, right? And the only difference is in that growth from 55 billion to 2.2 billion was it wasn't just about delivering a price. It was like, what does that price mean? How does that price compare? What does that price, and it was it was the way that they were able to monetize the data that they received, which is why these servicers are being able to, like, they first get all the data, and then they get a solution like you're saying, HomeBot, to be able to data mine, extract the valuable elements from it, and then they get a solution like NewsZip to be able to sort of match the data with opportunities between relevant parties, right? Between the the realtor and the loan officer. So it is interesting because it's really oddly immolating, almost like self-immolation. It's like immolating the business. It's like a black hole that's just sort of sucking the business into itself.
Here's what I would say. I like that framing of it because I think that imagery is pretty strong. What I would say, though, is we're starting to see a gravitational pull, to use the same language. We're starting to see a gravitational pull to what the consumer needs. And the consumer needs insights presented to them by an expert, trusted source that they can maneuver off of.
That are actually personalized. They're actually to their actual financial situation. Yeah.
And what's it going to mean? It's going to mean that they are less of a freelance lead, or they're going to be less in the wild for their next transaction, because you're going to be able to put insights and data that have virtually lock in trust for the next transaction. I can't see another way. That's how it has to go.
And it's not all going to be servicers. Whatever loyalty you have, if you're a bank, if you're chasing people with your checking accounts or whatever, you know what I mean. If you're a servicer, it's your service clients. If you're Rocket and you own lowermybills.com, it's those clients. It's like whatever. Whatever assets you have, whatever data you have, like it's walling off. The walled garden, right? Walling off, giving people reasons to stay, right? Yeah.
Yeah. I think there's still going to be tremendous competition to win the first-time home buyer the first time. Yeah. But what I think is going to happen is just the way risk-based pricing works. The more information and data I have, the better risk-based pricing I can dial in. And if I have, I like to think of analogous products. The credit industry said, hey, FICO scores are pretty good. Everybody's been using them for 30 years. Credit scores are good. But even within credit scores, if we use trended data, we can start to give you an even better view of the resiliency of a customer, because we're now looking at trended data across behavior. And now this FICO score comes with context. And it maybe not all 680s are the same, because one's headed in one direction, one's headed in the other, one's more resilient, blah, blah, blah. The exact same thing's going to happen with financial ability to repay and willingness to repay. It's going to go the exact same way. If you join my program, if you join my dashboard, if you share data with me, I can give you a better price. I can dial it in because I'm watching your behavior. I know what you need. I'm going to work with you. And you're going to win the first-time home buyer once, and it's going to become very difficult to remove that person from an ecosystem if they're delivering that value long-term. So whether it's a servicer or some other app, I would encourage servicers to think about this, because they'll be dramatically displaced if they don't, because that's where the money.
Think about the tool that insurance, like auto insurance companies provide auto drivers and say, look, put this chip in your car so we can actually monitor. We're going to invade your privacy, like, consensually, but we want to know how fast you're going, like how hard you steer the car, how many miles you're driving, and we're going to give you risk-based pricing based on the behavior that we're monitoring. And so if there was a way to be able to monitor a home and the behavior of the home, you in the events of the home, you can imagine, let's say you have a home and you never cook at home, right? And let's say the majority of factors that drive homeowners insurance is kitchen fires, but yet the home senses that you never cook in the kitchen, right? So why would your insurance-based pricing be the same as if you were operating and actively engaging in behavior that would be considered higher risk, and be priced the same as that higher risk behavior. It doesn't make any sense. The problem is it's there's a lot of homes in this country that are antiquated, and it's hard to it's a whole smart home kind of innovation.
I think you're right. I think one thing I think a lot about is the exception to the rule. I am, as you can tell, very confident in the trend and in this being the future, but there is a major exception, and you mentioned it. Homeowners insurance has oddly resisted granularity, and they have really dialed in. They've really dialed into like 5 things: roof age, whether you have a pool, and square footage. And like, that's like it in some cases.
Maybe.
Now, yeah, maybe. And now they are kind of running up against an issue, though, where people in Ohio and Minnesota and Michigan are finding out that we're subsidizing condos in Florida and homes in other places. And so now there's a push to get more granular because that industry hasn't, but they've been able to resist granularity to a degree for now. But I think you're exactly right to expand it where you did, because we haven't done a great job about the relationship between the consumer and the home. We've looked at the consumer, we've looked at the home. We're just starting to now look at that consumer in that home. And that's another area of innovation that I find really fascinating. What's the relationship there? One of the things that I used to complain about a lot is, and I think everybody knows this in our industry intuitively, but we never say it, there's no such thing as a fixed rate mortgage. Because you can't ever tell somebody what they're going to pay every month, not just because taxes and insurance, although that's part of it, but because of energy costs. So if you put energy costs in with taxes and insurance, in with principal and interest, you never really have a fixed rate mortgage at all, to be honest. Now, it's a smaller variable than the big nut of interest, sure, of your interest rate. But come on, like, that's another piece that somebody could differentiate on. We're not there yet. We haven't gotten it. But those are places where I see this going. That would be later, way later in my now, next, later mind. But
how's that podcast going?
Now, next, later?
Yeah.
It's great. I think it's going really well. Yeah. Thank you for asking. Yeah. I mean, I didn't name drop it on purpose. It's called that because I use that framing in my brain all the time.
No, I love the frame. It doesn't seem as successful as Real Fridays, but I do like that. I like that you're trying.
Yeah.
I like that you're giving it a go.
Yeah, very bold, very bold of you to try to do something without us. Yeah.
We're a plucky.
Exactly, Brock. Now, is that in partnership with Chrisman or what is that?
Chrisman Media. That's right. So Robbie, Chrisman, and Rob thinking through like where's it going and where it should go. Robbie crafting strategy.
So they own the content. So they just own the content.
Daily content. I mean, you mentioned the likeness before. Let's talk about where the real value is, Rick. But yeah. It's the sponsorships and the content live on Christmas.
Brock and I aren't dumb. I mean, we invited you here for a reason, Jeremy. We're not dumb. I mean, if you want to compliment us on our choices of where we feel the value is, we'll take the compliment all day long.
I think you're right. I think this is one of those cases where
management has no value without labor. So we needed good labor.
That's right. Exactly. I think this is like one of those cases where the more fun, insightful, entertaining ecosystems that overlap, the better, right? Yeah. And so you and I have talked about this a lot, Rick, but the one thing I was always really curious about was sort of the more informal, more thoughtful kind of way to ask questions and challenge the industry that isn't dependent on the traditional media structure. And so I think we've seen it in other industries. Sports entertainment comes to mind as like one of the biggest examples, but like where there's just the fact that you have overlapping personalities pushing forward on ideas or entertainment around this thing. Like we know real estate is a hugely serious investment. Housing finance is a hugely serious piece of the economy. It's also fun and interesting to people to talk about other people's houses and to look on Zillow and to think about consumer journey and consumer experience. So the more we have Real Fridays, Now, Next, Later, and other kind of competing thoughtfulness, you'll hear a little bit about Housing Insiders coming up, John Lawless and me on Now, Next, Later. For me, it's not about like me being out there. It's about creating this community. You talk about it a lot.
So what is Housing Insiders? Is Housing Insiders another podcast?
No, it's going to be one of the Now, Next, Later reoccurring features.
Oh, so, got it.
So yes, another podcast in the sense that it'll be on Spotify and Apple. You can download it and listen to it on Spotify and Apple, which is not true of the video podcast, but it'll be that part of the Now, Next, Later schedule.
Yeah. Well, when you want to bring Rick on that show, you can go through the typical booking channels.
His booker is tough. His booker gives me a really hard time. I mean,
hide the children.
They get me on here. And they consistently tell me how Rick's so laid back about time. He's, come on whenever you want, call, name yourself whatever you want, talk about whatever you want. I mean, Rick's booker just tells me I can basically do whatever I want, show up late, show up early, in all manners of, so it's great. They've been really accommodating to my schedule.
Yeah, exactly. I'm glad you're taking their direction. But no, so I am excited for the HomeBot conversation next Friday, and
me too.
I actually, this is sort of a big reveal. I actually have a contact at Airbnb with the CEO of Airbnb, and I'm trying to get the CEO of Airbnb on our show to be able to talk about housing and the future of housing and the relationship between short-term, long-term rentals, fractional ownership. I think it could be a very, very cool conversation. And that would be a conversation, Brock, you would be invited to attend. So
interesting. Yeah. I'll have my appearance fee go up for that one. You're gonna need me.
Yeah.
Oh no, of course.
Well, we still haven't settled the last thing here, a minute left. You mentioned your appearance fee, Brock. We still haven't settled Vermont beer versus Maine beer. Is there going to be a taste test at some point where Vermont beer and
no competition? Maine beer blows it out of the water.
I don't know, man. That's a really good, perplexing question. I think we need to do a live one in person.
We'll record from
at any NBC. Neutral territory.
If you guys want to come to, Portland, Maine, Labor Day weekend, I'll be at Bissell Brothers Brewing, which is my personal favorite brewery anywhere. Portland, Maine.
No, what we'll do is at Portsmouth, New Hampshire, at the New England Mortgage Bankers Conference.
Yeah,
it's neutral. It's neutral territory.
Yeah, that's a neutral site right in the middle.
Yeah. Are you guys are speaking at that conference as well, right? I'm moderating a panel, and you guys are speaking as well, right?
I actually, I'll be there. I'll be leaving early. I'm in a wedding in Detroit that I do not want to miss. So I am like,
I think that's how I got my speaking role, right? Because you bailed and I
think I ended up not getting a speaking role. We were pitching doing a panel together, and now I don't think we are. So I'll probably go. Yeah,
I'll make sure we'll make sure that New Zip is
I like that conference. I'll
properly represented.
Me too.
The hotel is expensive though.
Everyone should come to Portsmouth to the New England Mortgage Bankers Conference. It is definitely regional, obviously, but you get what I like is it attracts decision makers from the region, and you get a pretty high level discussion. Panels are out of this world, and then the people you're talking to are running mortgage, running companies, running banks, and lenders. So I've always been a big fan. I've always benefited from the relationships in that network. That to this day, being in Detroit for 8 years, I have still found that going on 9 years, I have still found that the New England relationships are really, really strong, and I've benefited a lot from mentors and learning and everything. So definitely go to that conference.
Yeah, some good steady banking leadership in New England. But no, it's 1:15. Let's call it a wrap. But I appreciate everybody, and I appreciate you guys, bringing to the forefront of what we are here to talk about at Real Fridays. But I am excited for HomeBot next Friday.
You guys are gonna love Charlie. I think at least Jeremy's met him briefly.
Let's make it a good week, man. Let's make it a good weekend and a good week, and stay out of the rain. Make sure you stay out of the rain, and look forward to seeing you guys next week.
All right.
Sounds good.
Continue success. Later.
Take care, guys.